This is the Intercontinental Exchange. Together with its subs, engages in the provision of market infrastructure, data services, and technology solutions. So when you look at like NASDAQ, that's an exchange. Excuse me, the New York Stock Exchange is an exchange. These guys manage exchanges where it's a marketplace. That's what they do. And they also sell data. Has a market cap of 88 billion, $9 billion of revenue. So I'm going to go through and do a complete valuation of this guy, and we'll do it together here. I'm going to open up another screen that has this data. It's going to have this data. That way I can use two screens in my favor, and we'll go from there. All right, so we will change this symbol. And what was the name of this business? It was Intercontinental Exchange. So I'm going to go with an 8 here. It's a domestic company to me. So I'm going to go with an 8. Now let's get into their financials and see what they've got going on financially. The trailing 12 months of free cash flow for this company is $3,774,000,000. And they've been growing that number nicely, which is one of the things that I liked about this business is they have really consistent growth. Are they growing? They're growing by like 11, 12%. So play it safe and go 8% growth. I'll grow this. This number here represents what I expect 2025 to be. And it's going to be the trailing 12 months plus 8%. So I'll use that. Now the intrinsic value, why did that number disappear? The intrinsic value of all these cash flows, and that's what I'm buying when I buy this business, is all the future cash flows, is 106 billion. Now let's take a look at to see how much cash and debt this company has. We'll put that in here. They have $755 million of cash, $21,520,000,000 of debt. Look at that, $85 billion of value. Now, how many shares do they have outstanding? They have 574 million. So they're actually priced at a 4% premium. If you compare the value of those cash flows, you add cash and take away debt, it's fairly priced according to free cash flows. Well, that's not exciting. There's some exciting stocks out there that are nicely discounted. Let's carry on, see what earnings per share look like. So the earnings per share are expected to be $6.79. This is a growing business. It's single digit. They're going to grow like 6% a year. So I'll go with 18. I'll grow that by 5. So this stock is not discounted. It's actually being priced at a premium. It's not a super desirable business to me. It's just an exchange. And it's not like Microsoft, which is really desirable. And I'm willing to pay market like fair price for Microsoft because I want to own it. That's a different conversation. There's companies that are very desirable like Microsoft or Google or Meta, but this one isn't in that category. So this one's going to be a total pass for me. ICE is a pass. It doesn't value high enough, and that completes my analysis